And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another beautiful Monday, October 17th, and essentially time is running out, and that is for these markets to make a decision. The next move is going to be a big one, and there's a lot to talk about today. These events that I'm going to talk about could be the catalyst for the next big move, and here's what I'm talking about. One, the dollar pulling back right there. So, you know, that's good for Bitcoin if you're bullish. But check out earnings coming out this week. You got Bank of America. You've got BNY Mellon, Netflix, big ones like Sands and Goldman Sachs is in here, and Verizon. And some of these companies, if you look at their stock price, they're absolutely getting obliterated. Netflix and Verizon, just two that I'm off the top of my head. But so we got earnings coming out this week. We've also got the VIX expirations on Wednesday. So the VIX, let's see if I can get it up here, is the volatility index. And when this thing is bullish, and when I'm talking about bullish, basically in the bullish control zone, and that is anywhere above 30. It's typically indicated we're going to get a big volatile move in the stock market. That move has typically been to the downside. Let's see if I can get the right symbol up here. There we go. So anytime we've seen periods of high volatility this year, of course, moves have resulted in downside moves. So how do we want to pair this up? So again, options expiration on Friday, the VIX expirations on Wednesday, and then we've got major housing data being released. They are unloading the balance sheet. What I mean by that, Treasury auctions this week. On the lighter side, we also have a whole bunch of Fed speakers coming out. So we'll see what they say on the economy, but I think the one chart to rule them all is the dollar. And first thing I will bring our attention to, the dollar is pulling back. And we actually did call this out saying, hey, if we do get a pullback likely to come into this region based off of the fib target, that 618 coming in right there. So that's where we would expect a higher low to form if we are going to get one. Somewhere in this little pocket right here, right around the 618 along this trend line. Very likely to get a bounce. But what is happening? Why is the dollar pulling back? And not this report. So the UK, right? We talked about the bond floor being lifted on Friday last week, and it was lifted. Alongside this news, the UK new finance minister scraps almost all the planned tax cuts in its bid to appease the markets. So the UK finance minister, Jeremy Hunt, announced almost all of the controversial tax measures announced by his predecessor would be reversed. The major U-turn includes scrapping the cut for the lowest rate of income tax from 20 to 19%. They are also getting rid of the corporate tax cut. And so their message was, hey, we're going to stimulate and we're going to give tax breaks to the rich. All of a sudden that flipped, and now the German pound is starting to rise. So basically the Bank of England had the opportunity to restore confidence in itself, and you can see the pound taking a bit of a rally alongside, well, let's see, the yen is getting faded. Any rally, I mean, this thing's been straight to the, dooms. And then the euro also benefiting there. So the question is this a short-term Band-Aid to a cut jugular? And I would say yes, as long as the Fed continues to raise rates and tighten, the great old saying, don't fight the Fed, right? And so when they tighten, the dollar gets strength. And I think it's a sovereign debt crisis, not only bonds, in the UK, but you've got bonds in Japan, Spain, Portugal, Italy, Greece. I was just watching something saying that basically all those countries in Europe have the same problem. So that to me signals more of this, which on a macro schedule, I'm going to get rid of some of these drawing tools as best I can with one hand. But that is macro bullish heading towards the highs of 120. That's kind of the target from 2001. What do you know? The last time the dollar took a major 20% rise from 1998 to the year 2002. So right before the dot-com bubble, similar, 30% gainer right there. But that happened over 2 years. This is just 30% over the last year. So dollar is looking bullish still. Even in the short term, I would expect something along this line. I just saw on the 5-day, see, we are getting a tick below there. So I would expect minimum dollar to come down to 111.15, and that probably lines up with Bitcoin taking a bit of a bounce in the short term to at least the top side of the range, actually, which I'll show you on the 4-hour time frame. Would be, I wouldn't, if the dollar does pull back to that target, which was right there on the 5-day. I just marked it off. Let me mark it off again. That's why I wasn't showing. So if the dollar does want to pull back to the 9 exponential at a 111.14, I would say that does line up with Bitcoin taking a bounce, minimum up to 19.9. If that area is defeated, my next target would be 20,500. But unfortunately, guys, we had CPI come in hotter than expected last week. We didn't get a range breaker. We had inflation come in worse than expected. That didn't result in a range breaker. We are still in kind of this overall range between 20,500 and 18,100. So what does that mean? Well, we've been in this low period of volatility for some time now. And even though this does look short-term bouncy, like Bitcoin does want to, if we do confirm this as a higher low, again, we're going to need a daily closure, probably, above 20,000 bucks. That'll look good for definitely a test towards that green 55. And that's coming in right around 20,750. And so I would expect for the downtrend to maintain, especially with news coming out like this. So I don't know if you're familiar with Scott Guggenheim, Scott Menard from Guggenheim Partners says that to be ready for the Fed to pivot, which could come as soon as November. I think that's garbage. But he said cracks are forming and the Fed won't stop raising rates until something breaks. Asset manager Scott Menard warned. So what was the takeaway from here? He said, get ready for the Fed to pivot possibly as soon as November because from where he stands, cracks are forming. While his comments and the Fed raising rates are certainly not bullish, Menard sounded convinced that capitulation point is coming sooner than later. So even Guggenheim guy Menard says that capitulation hasn't happened. And in order for a capitulation event to happen, you're going to see massive volatility and likely the NASDAQ to make some new lows and the dollar to make some new highs. And we have the next dollar target. I mean, it's really easy. Just look at the past prior cycle market highs coming in right here. This is the last major inflection point at 120 from, going back to September of 2001. So if Bitcoin does want to break, and we have a target of 124, that's when I believe you'll see capitulation happening. What happens? Everybody flights to the dollar for safety, the strongest currency in the world. It gets stronger and stronger. And with the Fed, the first part of November to start to raise rates, I think, is completely off about what Menard is saying. And this article, I think, was from, let's see, when was it? From October 7th. We are October 17th. So it's not like it's that old. But apparently things aren't breaking yet. And the bond market didn't break yet over there in the UK. And here's another article I came across today. And, Jeremy Grantham, pretty legendary investor, one of the perma bears, some people call him, but says Jeremy Grantham expects S&P to tumble by 26% to around 3,000 points this year. And he said, quote, "This is a more dangerous looking moment in global economics than even the madness of the housing bubble of 2007. He says, quote, "The deterioration in fundamentals on a global basis looks absolutely shocking." And he gave this in an interview on Reuters magazine. And Grantham sounded the alarm on a super bubble in asset prices in January and declared it was entering its devastating final act in a research note published on August 31st. So in the note, he underscored dangerous combination of hugely overvalued stocks, bonds, and housing, soaring inflation, interest rate shocks, and surges in commodity and energy prices. He also flagged Russia's invasion of Ukraine, ongoing COVID-19 lockdowns in China, and shortages of food and resources as additional concerns. Some of the things we've been talking about on our channel, right? Inflation that is looking to go well into 2023. How's the Fed going to get inflation down from 8% down to 2%, where it's supposed to be, right? They're going to have to continue to raise rates. You got to get people to stop spending. How do you get people to stop spending? You got to make them feel poor. Their real estate's got to come down and their stocks got to come down. And that's why we've already been talking about, as the dollar gets more bullish, risk assets should sell off. And so I'll just check in on the stock market, even though we're getting a bit of a bid here around the purple 200 exponential. And here's what I would say on Mr. NASDAQ. Any kind of a daily closure below 28,604 looks good for a move to the bottom side of this channel, and then we better hope it doesn't break. The Dow Jones, again, just going up as the dollar comes down. And are we going to get a little more legs off of this move down? Let's just see if we use a fib where we could expect the move to kind of bounce from, and the 0.5 or the 382 probably going to be a bouncy area, at least on the first pass. But I'd say the move down to 111.14 is incoming. So maybe a temporary relief bounce in the markets. Depends how earnings start coming out this week, and how some of the housing data comes out. So I guess I'll just get back to Bitcoin and get back to boring repetitiveness. That's what trading and TA is, patience. People that are patient are rewarded. We've been looking for a breakdown for some time, and I'll just bring us back to the 4-hour time frame. This is the 4-hour time frame, and I would say any kind of a 4-hour closure back above 19.9 is going to get you back to the top side of the range at 20,500. And if we start to lose this region at 18.9, probably going to revisit the lows here at 18,235. Here's what I am seeing. Even though momentum is crossed to the upside on the 4-hour, we got declining volatility. So I'm not expecting a big move. I would expect this to reset And then for a move to take place, let's take a look at the 6 hour. 6 hour, really actually, by the way, on the 4 hour, I'd say, yeah, above 19.7, that's probably going to be your 618 fib on the 4 hour. Yep, coming in right there, 19.6. So above even 19.7 on a 4 hour is going to look good for possibly that move all the way up to 20,500. But again, this is the range we've been in for some time. And I want to bring you back to one other thing, because I saw this comparison this morning. Sorry to bore you to death with my old TA fun facts here, but this reminded me so much because I was trading this market. You have this fractal right here. We're coming off the $20,000 high. We hit 58. Excuse me. Yeah, all the way down to 5,800. So from 20,000 down to 5,800, rallied all the way back to 11,000, back down to 6,600. 9,800. So I was trading this entire market, in fact, and we had this long descending triangle, and it reminded me of a couple of videos I brought back and said, look, it's mostly going to be sideways and down for the next 6 to 12 months, 18 months, as soon as Bitcoin enters a weekly downtrend. But we had this same period right here of lower highs, lower lows, descending triangle. And you can almost see it. It looks very similar. And that was right before the big breakdown from 6,000 down to 3,000. So again, what do we have here? The 2018 market versus right here. It is the same descending triangle. So any bounces up to the top side of this trend line, I am expecting to get faded, and for ultimately this to roll over. And how could we, begin to say, okay, that opinion is invalidated? Starting with a daily closure back above here, I'd want to see the market do something like this, a big trend reversal on the weekly time frame. So we take out 25. Put in a higher low. This would look good for some trend reversal. Otherwise, right, it's the same thing as we saw back in 2018. We have this long descending triangle. Bitcoin just dribbles along, and then finally takes out the lows off of a major economic news event. And where's the measure move? Off of this descending triangle. And then we'll see if it lines up with the fibs. So that is just a real quick measure move from the 50%, breaking it at about 75%. Close enough is close enough. And what did I want to do? I want to throw on a fib from this low to high. So does it quite measure up? If we take the range low to the range high of this huge consolidation, wick to wick, it's pretty darn close. But what else do we have kind of in play here? And it's a very similar move. Anyways, I'm not going to get into the nitty gritty on the big downside moves we've been talking about for the past few weeks, but I might as well do it. But this is the major breakdown. So you can see this consolidation was from January 21 to May of 22, so about a year and a half long consolidation. When it finally ripped to the downside, it initiated a target down to this level, which is the 1618 fib. If the dollar plays out bullish this year and through the end of the year, and you see things like bond yields rising, I mean the 2 years, this is the 2-year bond yield, right? So when interest rates go up, how much did we raise them? Is that right? A 3,000% gain? No, that's a 4. We went from 0. Yeah, that's right. It is. It's like a 400% gain. We went from 0.1% to 4.4. Thought I was going blind there for a second. So interest rates are up 4,000% this year. That might have some negative impacts on the markets, and that's why I'm pleading with you guys. If you're watching the video, I'm not pleading with you to like and subscribe, but learn the trading view techniques that can help you identify, what is an uptrend, what is a downtrend, and then you can position yourself accordingly if you think the market is bullish or bearish. And there's a free link in the description below. You can walk through, get TradingView set up, and then begin to track these assets with us. It's definitely worth your time, and it's actually a bit of fun because you can look at assets like XRP, and when you see a death cross looming on the 5-day time frame, when price action gets sucked into this area, it's very, very likely to get spit back out. And right now, shorting this guy from the trade setup we talked about, just off the green 55. That's 8% down, and you've had the chance to take the trade multiple times. I don't know how many times you need to make 8% a month to make a career, but that is some valuable information as well. And yeah, you can just see this descending triangle broke to the downside. We are retesting the breakdown level. If this thing really gets shafted to the downside, we're talking the bottom side of the range, which is a 35% move. So, hypothetically, maybe Ripple gets one more stab back up here towards 50 cents. But the idea was to be shorting as close to 53 cents with a stop loss above the prior wick. And, profit taking one is coming in at about $40, and then profit taking 2 at 31 cents. Again, this isn't financial advice. I'm not a financial advisor, but I'm just giving you kind of a macro trade setup for Ripple. If you're wanting to play what's called a death cross, much different than a golden cross, which is on this other side here. And these are very powerful signals. As you can see, we got the golden cross right here. Price action gets sucked into the cross. Sometimes it overshoots it. But as long as this held, right, we made a higher low here, higher high, and it was off to the races for Ripple, playing a very nice move to the upside. So don't want to get married to the assets. Here's another one, Ape, that has been taking it on the chin. I believe they just got investigated by the SEC, something about, the Bored Ape Yacht Club founders. But here's a bit of a trend reversal on the daily time frame. Well, it looks like the beginnings or the etchings here, and I might be able to draw this out a little better going wick to wick. Anytime you start moving trend lines, though, you risk. Yeah, and so would it make sense for ApeCoin to rally up there? And here's why I would say yes. That's probably right at the 618 fib. So I'm looking, yeah, somewhere around the 0.5 or the 618 for a potential rally. Volatility is expanding from a low level. We want to see it above 20 percentile. And this thing will cross down below $4.50. So if we don't get that rally, and if the rally does get faded, I would suspect as the 4-hour Stokes begin to turn back down, downside moves are going to be greater than upside moves. You can see the last 4-hour increase as Stokes crossed down, we saw a 20% decline. Now, as Stokes have been crossed back up, Bitcoin's mainly been trading sideways, so it could be a bearish reset for Mr. Apecoin. And Ethereum Classic, another one we've been talking about for weeks, as it went up more than Ethereum, right, during the bull run, or the bull bounce, where Bitcoin bounced 30%, or closer to 40%. Ethereum Classic jumped 259%, and Ethereum jumped 131%. And what did we say? We said, hey, look, the bigger they are, the harder they fall. So if Bitcoin was going to come back down from 25,000 and retrace, you'd probably get a much greater retracement off of Ethereum. We talked about buy the rumors, sell the news, and that played out pretty nicely. But I would suspect, again, for Ethereum, the overall downtrend line to get tested at some point around $1,050, $1,080. Looks like that could definitely happen. Okay, so I guess final thoughts on the market. On the NASDAQ, I'm going to pull up another chart here, take off a couple things, and we talked about this setup before. This is a 200 simple, and these are the two to be looking at. Forget all the other lines. The red 10, yellow 21, green 55, the blue, the purple, what is that? The cyan 89. I don't use these ones anymore, but these two are good for getting the macro direction. And if you wanted to do that, you would just go to your settings there and put on a purple 200 exponential moving average and a white 200 simple. And look, this is the NASDAQ just beginning to lose the purple 200 and the 200 exponential and the 200 simple, very important moving averages. If we start closing below there, which I wasn't surprised to see a little bit of a bounce today. What about the Dow? The Dow bouncing back, reclaiming it. That's a good thing for the Dow. Dollar wants to put in a little retracement. And that would confirm possibly, no, it'd be one drive of bearish divergence. So yeah. Look at that, showing up here on the weekly. How do we confirm this as a lower high? Really, yeah, any kind of a closure below this wick or below this wick, below this wick or that wick, below the 382 would definitely do it for me. And we'd probably be looking for a move to the green 55, so an overall retracement. But there's a lot of days left on this week to go. So, it's Monday. We got a lot more to cover this week, a lot more ground. But that is the chart to rule them all, is King Dollar. Watch out for your dollars. And, yep, I think that's going to wrap it up. So, yeah. NASDAQ, S&P, they're all coming into that area where you do not want to see this area damaged or lost, because once you get below there, you can see that was the COVID breakdown. And this is what Jeremy Grantham is talking about. Stocks lose another 25%. I think they can go all the way down to this green box right here. So we may get a bounce here. Where would a bounce come in? Likely to that 618 area. And really, as long as that is holding up here, you can see the trend line. This is the daily downtrend, and that would line up possibly with the 618. Some really boring price action, and that's what happens right now. You know, you're going to get that boring price action, and then when we see our signal, and this is the one I've been preaching about all year long, and it's volatility versus momentum on the daily time frame for CMEs. If this gets above 20%, we're going to take a look at the direction of the stochastics. Today we are going to cross back up above 19,772. So today it looks like we're going to cross it back up. The weekly momentum did not cross down last week. It's still up. Okay, so another point for the bulls. Did the 5-day cross down? No. 2-day. The daily. All right, so the 2-day is crossed up above 17.8. Excuse me, 19,800. So it will cross down. Is it a fight between the 2-day and the daily? So, yep, we want to see volatility expand on the daily, and that'll get us the next 25% move in either direction. And here's my overall bias, is I would expect the price to go in the direction of the trend as volatility begins to expand. Right now, we still have the daily downtrend in full force. So, I guess that reveals my bias there. That's it for today, guys. Hope you have a blessed and highly favored day. Don't forget, like and subscribe if you're new to the channel, and post a comment below if you have a question. Take care.